Hey everybody, welcome to This Week in Pre-IPO Stocks podcast. With me, we have one gentleman, Nick Fusco. He's the CEO of PM Insights. It's a pre-IPO secondary market pricing company. Evan is busy with some other business this week, so could not join us. And Clint is on the road. I think he's on a plane right now. So you're stuck with the brain trust here of Nick Fusco and Aaron Dillon. Of course, A.G. Dillon does venture capital funds for advisors. But so Nick, just fluid conversation for you and I today, boss. But we got three topics to hit on. First, let's talk about OpenAI and Microsoft. So if you recall, OpenAI needs to get a deal done by the end of this year. They got to flip to a for-profit entity, right? And if they do that, they have to do that before the end of this year. And they got $20 billion of capital on the line from this recent capital raise that they just did in the convertible note. So they got to get this done before the end of the year. Naturally, you got to go to all your investors and have them agree to this conversion. Microsoft's a huge investor. My math had them at like 45% equity ownership. And what's come out in the press here this week is they're looking to, OpenAI is asking Microsoft to go down to 33% stake. Right. And then they also, they're talking about reducing the profit share rights or eliminating them. And there's also some discussion around IP sharing specifically to the model. So, what do you think, just maybe to open up, like, what do you think about the whole concept of OpenAI flipping to a for-profit business? And then what do you think about their prospects here of getting Microsoft to agree to something, maybe at lower levels than what they're currently in at today?
Sure. I think in a lot of cases, it has to have some for-profit setup, right? So if you go to the OpenAI website right now, I know Aaron, you and I were on this before the call. You can see what the structure is meant to look like today. I don't think this is all encompassing, but it's pretty well engineered the way things are shaking out. But you have this one box sitting off to the left that's controlling a minority stake in what is investable. I mean, when we're focused on the secondary markets, it would be OpenAI Global LLC. This is the capped profit company, if we want to call it a capped profit company, because I think that the schedule on that cap is just going to go so much so that, it could be unlimited.
No cap.
Yeah, basically it's going to be a for-profit entity completely. I think Microsoft really holds a lot of the cards here. OpenAI has made the most incredible offering that you're going to get, but it costs so much to operate their company. They were forced to go in this direction. And even they admit on their website, they want it to be a nonprofit, have about $1 billion of funding to come in through a nonprofit, almost kind of like crowdsourcing, like you'd think Wikipedia gets a lot of support from the users, but they got like 15% of that. So that, of course, they have to go somewhere. But then with regards to how this is going to shake out, getting a deal done by December 31st, if they don't, Microsoft actually hold better cards than OpenAI. So I think OpenAI is the entity in the bigger pickle here, because Microsoft has the war chest to have a war of attrition here, where OpenAI really doesn't, is my thought.
I mean, it's not a great,
your thoughts.
It's not a great negotiating leverage position, right? So,
right.
I mean, they're like, it's kind of an interesting relationship with the two companies, right? Because OpenAI uses, first of all, Microsoft's an investor in your company. So there's that, right? They're using and distributing a lot of your models to their clients through Microsoft Azure, right? So they're generating revenue for you. They're providing cloud infrastructure for you, right? Pretty significantly. And I think for the most part, it was almost like an exclusive, but they've been taking on some other folks here, I think, over the past, couple of quarters, because Microsoft hasn't been able to keep up. But it's just like, this is a tough situation. Like, if you're Sam Altman and the crew over there, I gotta imagine that you're trying to get something done by December 31st. And you got to give the lawyers a couple months to do their work. It's June. You got like 2 months, 3 months to cut a deal with Microsoft, one of the largest companies in the world, and they don't have to really do anything, right? So it like this is tough. This is like a very tough position to be in. I think if you're OpenAI, to be negotiating with them. So
Right. And I think
yeah, what do you think?
you and I deal a lot with other venture-backed companies. And one of the biggest things that you always have to focus on is what is your exposure risk to one counterparty? And
Right.
in OpenAI's position, you're having Microsoft support so much of that business, both economically, but then you're starting to see like there's so many structural things that are associated with them, and even just the idea of can OpenAI work with Microsoft competitors is going to be coming out in these documents as well.
Yeah.
It's just crushing that Microsoft can have so much power in here and just be looked at from the public perspective as what they have on the OpenAI website, which is a minority economic interest. It sounds
Right.
so like
Yeah.
doesn't sound like it's got a lot of teeth, but it clearly does.
Yeah. Plus, too, man, I got to tell you, like, like not for nothing, Microsoft invested a lot of money, billions of dollars in this company when like nobody was using it. ChatGPT hadn't been launched yet, like the whole thing, right? I mean, they might have seen some of this stuff before, obviously, the rest of us. That would be obvious, but even still, like you don't really know how people are going to receive it. So that's a huge capital commitment and a lot of money at risk, right? So you would think you'd want to get some kind of reward, heavy reward on the other side of that. But yeah, I don't know. It's like this is going to be an interesting one to see how it plays out. I definitely agree with you. Like OpenAI needs to find a way to get to be a for-profit company. It's just going to be really intriguing to see how that shakes out with Microsoft. And also, too, not for nothing, I don't think Microsoft, from a regulatory perspective, can own more than 49% of this business because then they're going to start to have like some regulatory issues, I think, on their end. So, yeah, it'd be. I'm super intrigued on how this is going to play out.
Right. And I think so you've got board of directors controlling OpenAI Inc. This is the nonprofit, indirectly owns has to be majority owner of the OpenAI Global that we're talking about, the LLC. But think about if Microsoft can take that 33 and get it closer to the 40 or the 45.
Right.
That means that they have so much power in the Global LLC. Not a lot of other people can navigate in and around that, and no one's going to get the better deal. It's almost going to be like another most favored nations type setup for Microsoft, which is exactly where they want to be in this case.
Yeah.
And that's probably why you're not getting anyone else involved, and you're having Amazon with the Anthropic and the buddy system here.
Right.
But it's going to be a lot of carnage, and just so strange to have a nonprofit like controlling what could be one of the most profitable companies out there.
It's
right?
true.
In the future, like if we get the cost to compute way down and the economic output way up, I mean,
it's interesting because there are like nonprofits that control for-profit companies that are publicly traded in the United States, which is a very odd structure, but it exists, right? I don't know if this. Like, look, I think OpenAI received the message from a lot of state attorneys general that they wanted the company to stay in kind of the current structure today. Like this whole like flipping the whole thing to for profit, like was going to be no bueno. So now to your point that they're sticking with 51% owner or 50.1% ownership from the nonprofit, like that doesn't leave a lot of wiggle room. So I don't know. I wouldn't be surprised if there's a whole different kind of structure that gets played out here. I know just $20 billion is a lot of money to walk from. You know what I mean?
I think they have the capital to do it, and they could also simultaneously be creating products and services that could directly compete with OpenAI.
That's right.
So this could even be a temporary measure for the next few years because all this takes time, right?
Yeah.
So I don't bet against Microsoft.
Yeah. I mean, it would be nice, though, for those people that own OpenAI or have an exposure to OpenAI through one of the convertible notes or through, an SPV or whatever. It would be nice to get a clean cap table. You know what I'm saying? For the company. Because I think it's been pretty opaque, right? Is probably the right word on exactly what's what. and how the different legal entities fit together and
Right.
how dilution works and some of these other things. So,
Yeah, even to take that point a step further for public market investors, it'll be nice for them to understand how much Microsoft actually truly owns. Is it 33 when this deal is done? What economic incentives do they have in the capped
yeah,
for profit company? How does that change every year? Because once you get that, you can really do the modeling to get a sense of, okay, what's our bull and bear case for this particular holding of Microsoft? So otherwise it might be a relatively
yeah,
boring stock to watch, and now all of a sudden you bring this in. It's really exciting. And if the Microsoft analysts are not factoring it in, which they of course are, they're going to be able to actually do that with
yeah,
a lot more specificity around the contract, right? So yeah, exciting thing.
yeah.
I
I
think
don't envy.
public and private market investors have to be all eyes on this for sure.
Yeah, yeah. I don't envy the deal team from the two respective companies on this one.
No.
This is probably a tough negotiation. But okay, we'll keep our eyes on this. All right, let's shift gears. Let's just talk like really quickly on this company Cluely that just came out. So it's an AI app company. A16Z just led a $15 million, I think it was their seed or Series A round into this company. So it's gotten a lot of press because the CEO, the co-founder, Roy Lee, is the guy that was at Columbia and cheated on the interviews with like Amazon and Google and a couple other people using AI and like
Oh, the same kid. All right.
same guy and like got
Yeah,
the
yeah,
job.
yeah.
I think he got the job and everything. And then it came out and he was like, I can't believe this. I just cheated on these interviews and I got the job. It was like, and he did it on Twitter, right? It was so he's now the CEO of this company. Anyway, what's important and why I wanted to bring it up is not for the shenanigans that the CEO does online and through social media, but more for the fact that the company's product literally sits on your desktop and records everything that you're doing, right? And listens to everything that's getting said. So it sees what you're doing on your computer and listens to everything. So it's not like these meeting organizers that come in and they join the meeting and then they're recording and transcribing it back. It just kind of sits inside your computer and sees everything you see, hears everything you hear, everything you say, it records, and then it's like an AI
Right.
and it's like delivering this stuff back to you, right? Content or information back to you on what you could do or say or whatever, more context on what someone else is saying. So we talked last week about recording everything, or 2 weeks ago about, we're entering the stage of AI where people are going to record everything. This is an example, right? So what do you think? I mean,
I know what you think. You love this.
oh, I think it's happening. I don't know if I love it. I just think it's happening, whether we like it or not. I think it's happening, right? But are you surprised by this? Like A16Z leading is kind of a tip of the cap, right?
Totally. Yeah.
I mean, what do you? I mean, the CEO and that like kind of his marketing aspects and everything else aside, like the product, I find the product interesting, right? And they seem to be. I listened to a podcast with this guy Roy Lee over the weekend, and they're like wildly profitable. He said they're turning like 30-40% profit margins. They got good per unit economics, like not bad, right? So like, what do you think? It sounds like people are adopting this stuff. Is this good? Is it bad?
I'd prefer to take it as a business rather than me personally, if we can go that angle today.
Okay, fair enough.
We talked a lot about this, right? So if they're already profitable and they are getting some of those first movers, those folks might be the ones that are willing to pay the most amount of money for the product in the first place. But then over time, I would expect they can drive costs down.
Right.
As I say that, I realize actually the model should only get better by having more data that it amasses over a significant amount of time about you. So this is episode 200 or something silly, right, for our podcast. So if episode 1, episode 10, episode 20 only took up $20 worth of spend or something to analyze over time, now we've got 200, 10x that. I want to ask my version of this. What would Aaron think? I've talked to Aaron for countless hours over the last 5 years. What would Aaron think if I asked him this question? The cost of compute could actually go up, but then you could also be able to justify and pass that on to your customers.
Right.
So yeah, I still actually think they're in a pretty safe spot for maintaining profitability or even just growing profitability as you get more people bought in. And then the fact that it's such a unique thing and it takes a unique person, more like yourself than me, because I'm unwilling to just buy in yet, to get after it. Anyone that hops in as a first mover is probably going to be also an advocate for the product.
Right.
And they're going to want to talk about it. So I would say A16Z coming in hot, investing in them. That's getting announced a week or two after Tech Week in New York. I mean, that's a big deal.
Yeah.
So that means this is coming one way or another.
It's funny because I was talking with somebody yesterday afternoon, and this came up, and we started talking about, like, you go work for a big company, and they have these sign these employment agreements where they're like, any work product that you make at the company is owned by the company. Right.
Oh, yeah.
And then you leave that company and you can't take your files with you. You can't take your emails. Those are property of the company. Right. So, we started talking, and it was light bulb went off for me. I'm like, oh man, I can see companies getting a Cluely type solution, recording everything that happens on every employee's screen. Right. And then, everything that's being recorded, everything, just all of it. Right. And owning that. And then in theory, you have that data now on Nick, and I could make a Nick Fusco AI agent.
There you go.
Off of all the data that I've collected from you. You know what I mean?
Exactly. It's amazing.
This is where we're going. But I can see companies being like, why would I let that data go? Whether Nick likes it or not, I'm collecting that data. That's I'm paying for that. Right, it's mine.
And then it's
I just
all
think this is where we're going.
Think about, we'll just channel our Clint Sorensens for the call, but think about all the data underlying the training. Any company that assists with the training of the model, scale, Hugging Face, etc. That's where this is going, and that would be freaking awesome. You hire a bunch of contractors to do something, and you could just rotate them in and out, take the best of everybody. You get your AI agents trained up, and really, you're going to have a lot of ability to lay people off, is one way to put it.
Yeah, I think
you're not
this
concerned when someone leaves.
But then
you can amplify them while they're on site.
Yes.
And when they walk, you're going to have the echo version of them, right?
Oh, you still have them.
Right.
Yeah, for sure. That's my thing is and I don't know if if I went into a company, went back to work for a big company, if I could be like, you can't record all my data. They'd be like, well, you're not hired. You're like, okay, well, I want the job. And it's like, well, then you have to agree to let us record all your data. It's like, okay, I guess I'll do that then. But then I still want a copy for myself. At least it's, it's me. Right. So I walk away, I got my brain, I got the stuff in my brain that I learned and everything else, whatever experiences that I had. I don't get to take actual work product, but some people can recreate the work product from memory, I suppose. But I mean, there's something about someone having a digital Aaron version of me, and they're monetizing that, right? And I don't get a piece of it. That just rubs me the wrong way. You know what I mean? I just don't like that at all.
I did read an article recently about more B2C companies changing their terms and conditions so that they sit on your data, but you don't necessarily get the same rights as what you did.
Salesforce just did that. Yeah.
Okay. There you go. But imagine if LinkedIn did that, and you could export your contacts. No, those are LinkedIn's. You got to use us. You got to use our user interface. But that becomes very interesting as well.
Oh, I think this is all. I don't think we have a choice. That's, I guess, ultimately where I'm coming out on this is I think we're not going to have a choice. And I think there's going to be a whole bunch of companies like Cluely and others that are just going to be recording everything that you do and say. Yeah, that's where we're going.
So let's let's pivot that slightly to royalties. All right.
Yeah.
So there was a rumor that, geez, who's the guy from Die Hard? Why am I blanking on this?
Oh, that's Bruce Willis.
Bruce Willis.
Just
That
watched Sixth Sense the other day. Great
that
movie.
that Bruce Willis was going to be able to act after death because there was enough footage on him to create him on screen, right? So,
Okay.
well, should his family get royalties from this? Absolutely.
Sure. Yeah.
All right. So Aaron Dillon works for big company A and leaves that company because he finds big company B, or
Right.
founds small company C, or holiday. But should you not get royalties for having trained up that complete agent that is now effectively a carbon copy of everything you did from that firm? Should there be a royalty process? So yeah, there's so many things that could be opened up from that. It happens in music all the time. You want to sample Aaron's music? Guess what? Yeah, you have a very musical family, right? You
Yeah.
want to sample that music? You should get paid. You were the original writer of the music. How does
But
that
you gotta
trickle
have
down
rights
to
to
the
it.
corporate workforce?
But to me, like the thing is, you got to have rights to it. So like, so I'm agreeing with you.
Yeah.
If you own that asset, right, you can allow other people to use it and get paid royalties. I'm right there with you. I think there's going to be tons of instances where we're just not going to own the asset, right?
Totally.
And,
And maybe you should be compensated for that up front by taking a higher salary. So I was going to come into this company, and my salary was going to be $1 million. It should be 2, because I know you're going to record me, and then you're going to give me the boot after a year. You're probably going to give me the boot faster because you're paying me too much in that year, right? So
yeah,
it's very interesting how the economics might change for individuals very, very quickly on a massive scale.
It's just wild to think that like there could be like multiple digital versions of yourself, right, out in the world, and you may or may not have rights to those. I mean, I guess you could trademark. I mean, this is like, when I used to work in the indexing business, right? You trademark things. So I guess you could trademark your name, you know what I mean? Or your likeness. And then regardless of who's, using it, right? They can't use your name, you know what I mean? Or they can't use your likeness without paying you for that. I mean, maybe that's that's an interesting business, but
You get right. So maybe there should be a certain IP purge when you leave a company. You sign an employment contract,
but you got to negotiate that. You got to negotiate that, right?
Right.
So we're just going there, man. To me, this could be one of the most interesting investment trends, right? Is that like this idea of data ownership and access to data and how that data gets used. And then I'm like fiercely interested in the like intersection of what am I like I'm going into this knowing that someone else is going to own, my data, and I'm okay with that. Like, and I'm not talking about like I'm going to get a free Instagram account because I'm going to post my Instagram stuff on, what I mean, my photos on Instagram. Like that's one form of it, I suppose. But this to me feels a lot more intimate because it's literally every word I say, everything I look at, everything I see, right? I mean, that feels much more intimate than, what content I'm choosing to put up on a website or choosing to put, write on a website. This is like, it's everything. It's me.
Right.
It's the summation of all of my experiences. Right. So like I think that's going to be a tipping point on like what people are willing to give away for free versus not give away. And like the value that you receive back is going to have to be immense, I think, for people to say, yeah, go ahead. And finally, it might be like one of those situations where like companies are paying people for their data. To your point, like, and I could see employees being like, I'm not going to come and work there, and you're going to make a digital version of me because I'm going to work there for 5 years, and then you're just never going to pay me again. Like, you're going to have to pay me in perpetuity if you ever use that digital agent. I can see laws coming out around this and all different kinds of stuff, right?
It sounds more and more like a data contract.
Yeah.
Really, the more I think about it, and clearly I have that angle, right? But
Right.
very interesting. Very interesting.
So, I mean, but that could be a business. I mean, that's what I'm saying. This is the whole thing with AI. Everyone's like, oh, it's going to take all these jobs, but there's going to be, I think, a lot more jobs now, like a lot more companies opening up because there's all these other functions and services that need to exist, right? That don't exist today. So, I could see all those things persisting. But anyway, we were supposed to talk about this for 2 minutes, and we're like rolling. Okay, let's talk about Canva. So Canva is it's an online marketing solution, marketing technology, graphic design solution. That's the right word, right? For kind of your everyday man. So you can look like $1 million as a graphic designer if you use Canva. It's great. And if you haven't used it, check it out. Right. But they are doing a secondary sale at a $37 billion valuation. They're going to do 400, 500 million in secondary sales. This is the second, third secondary they've done. This one's been pretty public. They had a $40 billion valuation is where they top ticked back in 2021. So they're now eking back towards that top tick valuation. The secondary market, I have them at 31.4 billion. So this 37 billion is an uptick, right, from that point. But they had 150 million in Q1 2025 profits. They're doing 3 billion in annualized revenue. It's a big company, right? What do you think of Canva? What do you think of them kind of, tripping into, this is what is that? 3 billion into 37 is what is that? That's like a 10, 11x kind of thing, 12x maybe. What do you think of the company? What do you think of the multiple, the valuation, the whole thing?
Yeah, I'm actually just pulling it up from a comparison to Revolut because we kind of had a very similar discussion on Revolut pricing its similar activity way above where the secondary market was suggesting it should be, and it worked.
Right.
It worked out great. So Revolut, funnily enough, was just over. It was trading at 38-ish billion.
Mm-hmm.
Tender offer at 45.
Mm-hmm.
And then it took a month, but then the secondary market started to perform right around that 45, and ever since it's actually been higher.
Yeah.
So, yeah, in a lot of ways, we're actually halfway between where it's trading in the secondary market and that last round, that top tick at 40 and 41 for the 2021 secondary. So
yeah,
super interesting. It's almost like we're manifesting where we want that stock to be, and Revolut did such a good job of it. And Canva's got great momentum. I'll pull up the revenue multiple now, but yeah, it's actually trading at its historic low for the revenue multiple. So that's also a pretty good sign. I mean, it's trading at 1/5 what it was in 2021. So yeah, I'd say why not? Let's see them pull this off. But there hasn't been a huge amount of buyer demand bids coming in the secondary market as of late. It's been much more many more sellers wanting to be there, but also this sort of thing could actually alleviate some of the sell pressure, which probably could be a decent number of the same individuals anyways, employees that want to get out. So yeah, I think this is good to relieve some of that pressure, put it at a favorable price. It starts to make an indication to the market of cementing this is a real point in time that should be useful if they want to IPO later. So I think it's being well played.
Let me ask you this though. So obviously something like this happens though. IPO can't be coming anytime soon. I mean, you'd think this size of a company could definitely IPO. I mean, what do you think of that?
Well, yeah. If you get effectively like a pro rata out on however much you want to sell, I mean, if I was thinking about it, if an IPO might be a year away, maybe I sell a third in this tender offer, a third at the IPO, a third 6 months after my lockup, and then I still have actually more shares coming in during that time. So it's only a third of what I have today. I'm
Right.
still maybe with a little bonus extra third for retention because I'm a great employee and they didn't choose to fire me and use the carbon copy version of me, right?
Right. Right.
So yeah, I think it's dollar cost averaging
Yeah.
is a clever play, and there's no reason why they shouldn't get that IPO going or be thought about, especially how well eToro, CoreWeave, Reddit, everybody's doing
Well,
in
they
the IPO
definitely
market.
could, but do you think they would if like doing tenders like this? And I'm sure it's going to get gobbled up, right? I mean, it's kind of as a CEO of that company, you don't have to go if you don't want to, right?
If
You got
it's
plenty of liquidity there in the secondary.
yeah, if it's my company and I felt that the multiple that I'm going to get in the public market is just uh, wildly beyond what I'm seeing here, then yeah, I'll probably IPO. But if not, no, I think that they're getting that tender offer process moving,
Mm-hmm.
understand how it should play out. You can keep that company private for as
Right.
long as you want, and then you're not
Right.
exposed to all the same levels of scrutiny. But they are big enough to the fact, on the other hand, that at $30 billion, or potentially, if you want to be calling it 37, you could do a lot as a public company. You
Right.
could make acquisitions of other private companies a whole lot easier for them, and that's been the flavor a la mode, I guess, as of late too. So,
Right. Right. Right.
so yeah, we talked about OpenAI and Windsurf earlier. So,
Yep.
so, so yeah, that would just be a little bit easier in some cases to maybe pick up much smaller prey.
Right.
Um,
Yeah. 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 Okay. One last thing. This is not on the agenda, so I'll throw you. It's not really a curveball, but okay. Let's
Bring
talk
it.
Scale AI. So Scale AI. Let me ask you something. So Scale AI. This is like since Clint and Evan are not here, we can geek out on secondary market stuff for 1 second, right? Because since that's what we do every day.
Yeah.
But let me ask you this: Scale AI just did a deal at $29 billion valuation, right? The the CEO's gone. A lot of the best developers I hear are going over to Meta, right? So they're all at Meta now. Like from what I understand, they're like there now, right? Um, the buzz that I'm already hearing is that people, customers of Scale AI, are leaving, right? And then the new CEO came out this weekend and kind of signaled that they might even do like a little bit of like a product shift towards like making agents for enterprises, AI agents for enterprises, right? So here's my thing. I don't know, like, okay, $29 billion after the Meta deal's the number, right? I like, do you think the secondary market's going to let that thing trade at 29 after the executive team's gone, after like all of the big customers leave? Revenue's got to be
No,
impacted.
I'm
Like,
gonna.
I just don't see it. I don't see it trading up at that 29 number.
So if you've got a big public company and it pays a dividend, what happens to the stock price?
Stock price goes down.
There you go. Right. So they've done this. They've done this big payout. Alexander Wang is gone. He's over with Meta. We know that Meta is going to be making the same sort of sausages as what they were up
Very
to at
smart point.
Scale, right?
Yeah.
And now Scale's
Yeah.
like, oh my goodness, let's start making hamburgers instead. Yeah,
Yeah.
I would worry about attrition from my customers, but that's just maybe a running scared. That I think if Scale stuck to what they're good at, they should be able to maintain maybe not the valuation, but they
Right.
should be able to maintain a lot of that customer impact. And even if they lost 20% of their customers, but they could really keep the growth alive. The way they've done that foundational understanding of like the data labeling and all their expertise is incredibly important. And you don't want to necessarily just convert or map over to what Meta has, and Meta has nothing today. They're gonna have something tomorrow, right?
Right.
So yeah, I would say stock probably should drop because of that payout, because of the moves, and I would say the stock should probably drop further if they do completely pivot the business model. That doesn't make a lot of sense to me. They should add things like that instead of making that the core focus. So that's all new news, because I didn't have a big pessimistic view on Scale, because I don't think people want to move around on that stuff too much. But that's interesting. What are your thoughts? I mean,
Yeah.
It's quite the move. No?
Yeah, I would say this: the insight that you had on the dividend, dividend getting issued, and then the resulting impact to the stock price and the valuation is like very smart, right? Because this is a huge. I think, if this was a publicly traded stock, it would be considered like a special dividend, right?
Right.
So, like that's a huge special dividend, like 50% of the value of the company, or some might argue before the investment, it was like 100% of the value of the company. Um, that's huge, right? Yeah, I don't know. There's something to me like the fundamentalist in me is like they are losing all of their best customers. How can you pay? So to your point with the dividend, that's a very good point, which I hadn't thought about. It's very smart. Like, so it's not 29 billion. It's probably closer back to the 14 or 15 that it was before, right? So if it's 14 or 15 before, um, and now you just lost all your customers and you lost your CEO and some of your best developers, like, come on, man. You're talking like, I mean, that's got to be at least a third of the company, if not more. Like, you're talking sub 10 billion now, 8, 9 at best. So I'm just like, just really interested to see what's going to happen with the valuation of this thing, right? I mean, I'm sure there's some goofballs out there that are paying 29 billion for it now, right? That think it's going to go up,
It actually should be a really good case. So if we watch this play out for the next few months, how much volatility can be built into a private company stock?
Yeah,
that will be really impactful because, I was on the phone with a client this morning that was saying some of his compatriots didn't want to necessarily take a chance to buy into something at a really nicely discounted rate, because then they would have to remark their portfolio at the lower price today because they were just using the last round price.
Yeah.
And they're like, oh, well, if I already own 100 million of it and I buy 10 more, I know I'm getting a great price, but now all of a sudden my management fee is slashed because I got this great deal. Like, oh, geez, the reverse or perverse incentives on this are just getting out of hand until there's a proper mark to market that folks are going to be doing here. So.
Yeah, I mean, this is why I love the secondary market, because I feel like you're getting more of like a real world accurate snapshot of what the valuation of these companies, like these private companies, are. So this one's just, I'm like super intrigued by it, because it, at the 29 billion, or even before that, it was like kind of sneaking into like the top 10 for U.S. pre-IPO stocks. So, I don't know. This one might be like, my sense is that it's going to be a little bit of a bloodbath. That's my gut. I hope I'm wrong. Obviously, I hope they kill it. If they do the switch or whatever, and I hope they just kill it and they go 10x from here, right?
Right.
But man, I'm like a nervous Nelly around something like this. So certainly going to keep the eye on it. But all right, brother, this is great. Thanks for talking today. As always, this was a great one, bro.
Good stuff.
All right, man. I'll talk to you. Bye.
Bye.